In a matter of months, mortgage interest rates went from historic lows to 10-year highs. And that's going to have an effect on the supply and demand of this market. But will it affect the number of bidding wars we are seeing in the Denver metro area? Over the last year or so, buyers have been doing absolutely anything they can to get the home that they want, from, as you can imagine, offering 10 to 20% over list price. That's like $200,000 to $300,000 in some segments of the luxury market. They're making up appraisal gaps, what the appraiser says it's worth and what the buyer says they'll pay for it. They're making up that difference in cash at the closing table. They're making their earnest money deposit non-refundable before an inspection even happens. And inspections, no seller, well, hardly any seller is being asked to make concessions in this market, being asked to make any repairs in this market. Homes are being sold as is. That could be shifting, and we're going to break down what this rising interest rate environment means for both buyers on the demand side and sellers on the supply side. Hey everybody, I'm Ryan Haarer. I'm a Denver area realtor helping buyers, sellers, and investors up and down the Front Range achieve their real estate goals. And I'm here to help you understand what's happening in the market. So please like and subscribe to the channel, and more importantly, leave a comment below about this video and what you want to see in the future. So before we get to exactly how this is going to affect buyers and sellers and whether or not there are going to be more bidding wars in the near future, we really have to understand the shifting dynamic here, and that is to get straight to interest rates. So let's look at some of the intense demand to buy a home in the last year, which has been mortgage interest rates that fell to historic sub 3% lows. So the chance to borrow money for so little made buyers comfortable with paying over asking price, especially with the way this market appreciates. And as I'm recording this in May of 2022, rates are hovering, as you can see here, around 5%. And just for some historical perspective, 5%, over the course of 30 years actually looks pretty good compared to 20, 30 years ago. Just ask your parents and your grandparents about days when they were paying 15% interest rates. Money was very expensive back then. So, 5% still not a terrible rate, but from what we've been seeing in the last few months, the last couple of years, it is certainly higher. So as a general rule of thumb, for every 1% increase in interest rates, you lose 10% of your purchasing power. So if you were pre-approved to spend $800,000 at the end of last year, now interest rates are up 2%, you may only be able to afford about $650,000 worth of homes. So a pretty significant difference. And I am seeing some buyers drop off, peel out of the market and put their search on hold because they don't like what they're seeing in that lower price point. And we're seeing that concretely in showing numbers too. We had about 5,000 less showings in April than we did in March, many less showings per home as well. So that buyer pool, that demand is starting to decrease just a bit. I'm sure many of you watching this have either been out in the market a while and have been unable to find a home, or have been sitting back this whole time thinking like the market's just a little too wild for me. I'm not ready to jump in yet. And now you're seeing these higher interest rates. How does that square with you? What is it that's keeping you from entering the market? Why are you backing out of the market? Drop a comment below. I'd love to hear those stories. Please share your stories in the comments below about what you've been dealing with and what you've been thinking about this interest rate environment. All right, so I think we've established that demand is down just a bit, which means supply is up just a bit. And yes, that will affect outcomes for both buyers and sellers down the road. And we're going to talk about that in a second. Let's be really clear though, while inventory might be up just a tick, there's still a massive demand for homes. There is still a shortage of inventory, a significant one in this market. It's going to take massive amounts of inventory of homes coming online for us to get to a balanced market in the Denver metro area, where we have a 6-month supply of homes. That's what experts say is about what we need to be balanced. We're still at less than 1 month supply in most price points and zip codes in the Denver metro area, meaning if no new homes came up for sale in the next month, all of those homes that are currently on the market, boom, would be gone and there'd be nothing left for sale. So we really need about a 6-month supply for a balanced market. We're a long ways off from that. I don't think that's going to happen anytime soon. There's a significant housing shortage. They just can't build them fast enough here. And experts say we need 325,000 homes in the next few years just to restore some sort of balance. Not to mention homeowners who just refinanced at 3% and have gained a ton of equity over the last couple of years as appreciation has really jumped nearly 20% in the last year in the Denver metro area. They're not likely to move, unless they're looking to make a significant life change, a lifestyle change. Maybe they're downsizing or really need to level up if they're having more kids. Maybe they're moving out of town. Those are really the instances in which people may sell their homes in those high equity, low interest rate positions. But right now, most of those people are hanging tight. But having said all of that, slightly reduced buyer pool creates slightly more inventory, more homes left on the market at the end of April. We typically see about a 9% increase in active listings from March to April. That's the seasonal spring uptick. This year, we saw about a 44% increase of active inventory at the end of the month over month, about the same jump year over year as well. So we're not only seeing a jump from March to April, but from April of 2022 to April of 2021, we're seeing more homes on the market. All of that to say, there are many external factors, but it's a relatively good indicator of things to come. I don't think that this means for buyers that there aren't going to be any bidding wars. We've established that there is a significant lack of inventory in this market. And so you're still going to see that properly priced home, that well-kept home, see multiple offers, but we may see fewer offers. We may see an opportunity to ask for an inspection and maybe make a repair or two. We're going to see less offers way over asking and maybe just slightly over asking. The frothiness of the market may cool down a bit with these interest rates rising, with some buyers peeling out and backing down, and with, in turn, more inventory sitting on the market. Also keep in mind that different price points and different home types won't all react the same. The luxury market, $1 million plus, is really not seeing the effect of this right now. We're still seeing offers that are going way over asking. So, time will tell how interest rates might affect that price point. It's really kind of the suburban, $600,000, $700,000, $800,000 homes where we're starting to see a little bit of this change, where less people are touring the homes and there aren't as many offers on the table. Again, that's not perfect science. We're still seeing certain homes get multiple offers and prices being driven way up. But months down the line, we may see that decrease just a bit. The condo market is still relatively less competitive than the single-family home market. It's actually, I should say, a decent place for first-time home buyers to get their foot in the door and start building some equity. And if you have a 1 or 2 bedroom apartment and rents are rising fast as well, this may be a good option for you if you feel like you're priced out of that single-family market. Buy a condo, get into it, build some equity, and several years down the line, see if you can't leverage the equity you have into a new single-family home in the suburbs or wherever you may be able to afford. So this is a great segue into how the rising interest rates affect sellers. Buyers should start paying really close attention to homes that sit on the market longer than a weekend. Typically in a balanced market, we talked a little bit earlier about what a balanced market means. In a balanced market, homes sitting on the market for a week or two wasn't much of a concern. In this environment where we have extreme demand, a home that lasts longer than a weekend in most price points is a stale listing. If you get to Tuesday and your home is not under contract, there could be several issues at play here. I'm seeing a lot of really bad marketing out there where people are not taking great professional photography. They're not going all out with video. Not necessary, but it's something that we do to really make our sellers' offer stand out. More importantly, and I think this is the big killer for a lot of listings right now, pricing too high. I mean this in the nicest way possible to all of my sellers who I'm working with now and in the future. Don't be greedy. There is a reason that homes get listed at market value. It generates interest, and that interest creates multiple offers and bids that go up over asking price. buyers that work with savvy realtors, the realtor's going to be upfront with that buyer and say, this home's a touch overpriced. Are you sure you want to make an offer? Or should we look at this one down the street that's a little bit more reasonable? It may be a bidding war situation, but it's still going to be less than this guy. We don't want you to overpay. And typically that overpriced home will sit on the market for a week or so, sometimes longer, sometimes a lot longer. And I would encourage all buyers to actually look at those homes. It doesn't mean that there's anything necessarily wrong with the property. There could be, and you should do an inspection. That's the beauty of a home that's been on the market and overpriced. You can actually ask for less, for under asking price, and you can ask to do an inspection, an actual inspection. Yes, this is happening in this market. I just did this a couple of weeks ago. My buyers are closing next week on a home that we got $30,000 under list price, and we did a full inspection and asked for repairs, concessions. So pay attention to those homes as they sit on the market midweek. So will bidding wars stop because interest rates are rising? In short, not in the next few months, but those bidding wars may be less intense. Buyers may not have to go 10 to 20% over asking against 20 other offers. They may be 5% over asking against 2, 3, 4 other offers. Sellers still need to continue to list their homes at market value. Overpricing your home hurts even in the frothiest market. It will certainly hurt when there is slightly less demand. And in turn, they're going to have to start making repairs and concessions if their home sits on the market and they only get one offer. You combat that by properly pricing and marketing your home. I'm sure this video has created tons of questions for you. Please feel free to find my contact information in the description below and reach out to me directly. But I would really love it if you could leave a comment below. That would be awesome. I'm happy to respond to each and every single one of those, and it may also help inform me of what videos to create next. Thanks so much for being here. Please like and subscribe to the channel. Go check out our home and neighborhood tours also on this channel. More content coming soon.